Hi guys, today we'll discuss Shopify and its latest earnings. The current price of the stock sits at $377. I had made a video on Shopify previously with a target range of between $500 to $700 depending on your terminal growth rates and discount rate, but it seems like the stock has definitely fallen to the downside. Before we get into today's video, please consider subscribing to my channel. Shopify's investors have taken some serious losses, with the stock down 41% in the past month. Shopify's stock further plunged after its latest earnings report, which saw multiple analysts cutting their target prices on the stock. Despite that, Cathie Wood Fund bought another 129,000 shares of Shopify, valued at a combined $53.5 million, implying that she bought roughly in the range of $400. In terms of some top-line numbers, revenue in the first quarter grew 22% to $1.2 billion. Management said that the company faced some difficult comps in the first quarter, given that first quarter last year marked the highest revenue growth in the company's history, given stimulus and COVID-19 lockdowns. Monthly recurring revenue, calculated by multiplying the number of merchants by the average monthly subscription plan fee, increased 17% as more merchants joined the platform. One of the highlights include the fact that Shopify Plus, which is the most expensive plan, contributed 30% of monthly recurring revenues compared to just 26% last year, as larger merchants seek out Shopify solutions. As a result, subscription solutions revenue was up 8% year-on-year. Continuing on, gross merchandise volume, or GMV for short, for the first quarter grew 16% year-on-year. Gross payments volume accounted for 51% of GMV in this quarter versus 46% in the first quarter of 2021. Gross payments volume continues to benefit from strong performance by merchants on Shopify Payments and growing adoption by new merchants. Merchant Solutions, which refers to revenue from additional services, grew 29% year-on-year with the continuous uptake of merchant solutions such as Shopify Payments, Shopify Capital, and Shopify Markets. Gross profit margins decreased slightly due to a greater mix of lower margin merchant solutions revenue, lower margins in Shopify Payments due to mix, and increased investments in cloud infrastructure. As reflected in Icon, Shopify's first quarter revenue growth was around 3% below consensus. GMV growth, which came in at 16%, was also 5% below street estimates. The first quarter in 2021 is Shopify's toughest comp in 2022 because revenue in first quarter 2021 increased 110%. The next highest comp was second quarter 2021 at 57%. In Shopify's management call, management mentioned that some headwinds include inflation driving a shift to more discount retailers. In addition, there were lower merchant ads in the quarter compared to a quarter one a year ago. Despite these headwinds, management commented that both online and offline GMV in first quarter each continued to outpace their respective markets in the US. In the case of offline, retail GMV grew 6 times the market, underscoring the advantage of their omni-channel approach. Shopify also announced the acquisition of Deliverr, an asset-light fulfillment technology provider, for $2.1 billion. Deliverr provides a fulfillment solution to help manage the fulfillment process, and it complements Shopify's network of large-capacity, self-operated hubs. How does Deliverr exactly fit into Shopify's fulfillment network? So Shopify intends to become a logistic platform for merchants of all sizes on and off Shopify. Deliverr's technology will help strengthen its ability to manage merchant inventory from port to customer as it travels to the warehouse network, gets distributed across sales channel, and ultimately arrives at the customer's doorstep. Consequently, SFN, which is Shopify Fulfillment Network, and Deliverr will power Shop Promise, a new service that offers customers 2-day and next-day delivery options. In terms of the Deliverr acquisition, Deutsche Bank research points out 4 key points of value to Shopify. Firstly, scale. Deliverr will offer Shopify immediate scale in fulfillment, increasing the speed in which it can provide 2-day shipping. This is in line with competitor Amazon's move, which is also using Buy with Prime to empower small and medium-sized businesses. Buy with Prime allows non-Amazon merchants to tap into fulfillment solutions, and they pay according to what they use. The second point will be technology. Deliverr will help Shopify with inventory management and demand-driven inventory balancing. In addition, Deliver's partnerships with large customers like Walmart would enhance Shopify's data capabilities to better understand demand trends. The third point would be talent. Deliver is run by a number of experienced executives, including members of the team that helped to build Amazon's FBA. And the last point would be a reduction in capex. Deliver's asset-light model will reduce Shopify's need to build fulfillment center as it scales. In terms of management outlook, they gave a few key points. Firstly, overall, the company is operating in a more measured macro environment relative to 2021, but they are expecting increased e-commerce penetration. Secondly, year-on-year growth is likely to be slower in the first half of 2022 and highest in the fourth quarter. Thirdly, the number of merchants joining the platform in 2022 will be comparable to 2021, and that Merchant Solutions revenue growth will be more than double that of subscription solutions. Because of this shift in mix, gross profit growth will trail revenue growth. Next, the company intends to reinvest all gross profits back into the business. And lastly, the acquisition of Deliver is expected to be dilutive to operating margin this year. A few bank analysts also asked management a few key questions, and I've summarized their questions and answers in this table. One analyst wanted to know more details about the Deliver acquisition, and the management responded that Deliver will handle the post-order phase of the merchant supply chain. It is an asset-light software product that manages distribution fulfillment, and it will help Shopify accelerate its vision of an end-to-end logistics network. Deliver will also immediately accelerate fulfillment volumes because they're currently doing more than 1 million fulfillments per month. Scale of its entire SFN network will be towards the second half of 2023 and 2024 with better unit economics then. Another analyst asked about the slowdown in net additions in merchants, as well as the increase in operating expenses. Management said that this is a very difficult quarter in the market, but they still believe that their value proposition in an inflationary environment is unparalleled. They also said that lower merchant ads could be due to a very tight and transitional labor market, but management expects that labor market will ease. Sales and marketing expenses are high to bring more merchants onto the platform, especially internationally outside North America. And the last analyst asked about IDFA impact. The management said that there's no discernible impact so far, but they believe that changes have lowered merchants' return on ad spend, especially for SMBs. Therefore, the importance in connecting with buyers across many channels is evident, such as social commerce, which is gaining traction. Shopify stock is now trading below 10 times forward sales, a level that is not seen since 2019 and a sharp correction from recent history. To summarize today's video, Shopify shares have plunged due to results that fell short of street estimates, a tough macro environment, softer merchant additions, and the Deliver acquisition. In an environment with rising interest rates, pre-profit stocks and stocks with lower levels of free cash flows are generally not well liked by investors. I think Shopify still remains a strong player with a highly defensible moat, and its acquisitions and various initiatives are just laying the groundwork for its success later on. Investors need to be patient in the bear market. With that, consider subscribing and see you in the next video.